the most volatile week ever for the stock market. A stock market is difficult to understand or fathom as it is volatile. Pulled off another stunning U-turn on Thursday, transforming a 380-point loss for the Dow-Jones Industrials into a 401-point gain. There's one thing you can be sure of on Wall Street. The back and forth, the volatility, or the seesawing will continue. So, get ready. You're not going to see 50-point ranges. You're going to see 200, 300, 400-point ranges, said the president of Market Semiotics, a financial forecasting firm in Castleton, Vermont. At any other time in the history of the stock markets, a day like Thursday would be enough to draw a serious double take. But in these extraordinary times, it was the second calmest day of the week. The Dow set a new record on Monday with a 936-point gain, and after a 77-point loss on Tuesday, sellers stampeded on Wednesday and drove the Dow back down 733 points. On Thursday, heavy selling in the morning took the Dow close to 8,200, but stocks rallied into the lunch hour and picked up steam in the afternoon. Their average finished at 8,979.26. The gain of 401 points marked the 21st trading session out of the past 24 in which the Dow has finished with a triple-digit gain or loss. A new record of volatility, setting new records all the time now. Loan auctions by the European Central Bank, the Bank of England, and the Swiss National Bank, as well as the Federal Reserve's plan to buy approximately $250 billion in bank stocks, seem to restore some confidence to credit markets for now, although mortgage rates seem to be creeping up. Meanwhile, Asian stocks were modestly mixed in early trading today, with Japan's market recovering from its historic fall in the previous session. Tokyo's stock average advanced 129.66 points, or 1.53%, to 8,588.11. The index was still very far from recouping Thursday's 11.4% loss, its biggest one-day percentage drop since the stock market crash of October 1987. There's something going on here that's bigger than all this. Much bigger. The week's wild ride has concluded, but people might not know it by the relatively mild close on Friday. The S&P 500 surged almost 12% Monday, suffered its biggest drop since the 1987 crash on Wednesday, and rallied more than 4% Thursday. On Friday alone, the index swung nearly 7% from low to high before finishing with a 0.6% loss. These really wide swings, volatility, persist as participants look for direction, even after famous investor Warren Buffett said he was willing to start buying stocks. It's bigger than Warren Buffett, much bigger. Further information or data was released indicating that U.S. housing remains weak. Housing starts in September fell 6.3% to an annualized rate of 817,000 units, 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 That was well below expectations and marked the lowest level since January 1991. Meanwhile, building permits dropped 8.3% to an annualized rate of 786,000, an even lower number. That number also matched a level also seen in January 1991. The new data reflect continued weakness in the housing industry, which will weaken fourth quarter GDP and continue to spur write-downs at financial firms. It's not over now. It's not over yet. No, it's not quite over. The financial sector was a laggard, closing 2.3% lower. The wild swings of the past week had volatility at record highs, new records, with the volatility index hitting 81. Yes, new records being set all the time in the stock market. There seems to be something wrong with the world's economies, the nation's economies, and the U.S. economy also. There's fundamental problems here. The basics of all the economies. There's something wrong. Change is coming. And how is America's heartland weathering the financial crisis? While the concerns differ place to place, no one in the country is immune. In Pryor, Oklahoma, population 8,500, faith and a collective determination to make it through the tough times are helping residents in a town where 2 manufacturing plants recently shut down, eliminating 700 jobs. For about at least a decade now, the United States has been consuming more than producing. How can you consume more than you produce? Well, that's part of the problem too. It's a combination of things. Of course, it also goes back to who our leaders are. The leaders have dropped the ball, especially for sure in the last 8 years. And it also goes back to who that president is. And that's a whole different story. No, he will be remembered as the worst president ever. And it's also bigger than that. Anyway, now, in Pryor, Oklahoma, residents are sharing and caring for the less fortunate neighbors. We must all help each other out. It's just what we do, said the mayor. And rapidly sinking commodity prices. Prices so low that it could cost more to produce than they can sell it for. That's not good for the stock market either. There are a lot of variables. There's a lot of things going on here. Commodity prices are testing naturally optimistic farmers in the breadbasket town of Garden Plain, Kansas, where some farmers compare raising crops in these very uncertain times to going to the crap tables in Las Vegas. It's like gambling. In Des Moines, Iowa, while the city has not been affected as drastically as those on the coast, worries about the steady drumbeat of bad economic news have residents clipping coupons and cutting back on their spending at the expense of local small businesses. Yes, the consumers of the United States drive the economy. If they stop spending, well, that means it's going to get worse, even more worse. And next year will be even worse than this year. Yes, 2009, it will really be bad. And on top of that, there's more to it than that. It's bigger than all that. And these are all more signs of the end times, last days, transition days. And there are many, many signs. All you have to do is look around. Yes, these are more signs.